Welcome to Talker Tickers. We're here to cut through the noise of the latest earnings calls and get right to the signals that actually move the needle. All right, today we're tackling Compugen's Q2 2025 report. We'll hit the quarterly results, then dive deep into the pipeline, which is where the real story is. After that, we'll look at their cash situation, check out the upcoming catalysts, and finish with our take on what to expect next. Okay, let's get right into it. The Q2 results, well, on the surface, they look like a headline miss. So, taking a look at the bottom line, Compugen reported a loss of 8 cents per share. Now, that's just a 1 penny miss against what the analysts were expecting. But, the real surprise was the top line. Revenue was only $1.3 million, when the street was looking for over $5 million. That's a pretty big gap. The company chalks it up to the timing of milestone payments from their partners. And if we zoom out a bit, this quarter's miss isn't happening in a vacuum. You can see here, over the past year, the stock is down over 27%, while the broader biotech index is only down about 7%. So it's really underperformed its peers, which, it just puts more pressure on management to convince investors that the future looks brighter than the past. So with an earnings miss and a big revenue miss, you'd think the stock would take a hit, right? Well, it didn't. It closed completely flat on the day of the release, and that tells you everything you need to know. It says the market, right now, just doesn't care about these financials. They're looking straight past them, focusing entirely on what's coming down the pike. Okay, so let's talk about what the market is focused on. The pipeline. This is where all the potential future value for Compugen is hiding. So the company's strategy is really built around these 3 key assets. First, you've got COM701. That's their baby, their own internal program. If that hits, they get all the upside. But they've smartly hedged their bets by partnering up with 2 giants. They've got a deal with AstraZeneca for rilvegostomig, which is a really interesting dual-action antibody, and then another partnership with Gilead. So what you have here is a nice mix. It's like having multiple lottery tickets, and a couple of them are paid for by someone else. And those partnerships aren't just for show. We're talking about serious money here. This chart lays out the potential milestone payments still to come. And remember, this doesn't even count royalties down the road. You're looking at $170 million from AstraZeneca, and the Gilead deal, well, that could be worth over $1 billion. So when you see numbers like that, it starts to make sense why a single-week revenue quarter doesn't scare the market off. Of course, a pipeline full of potential is one thing, but for a biotech company this size, the big question is always, do they have enough cash to actually see it through? So let's check out their financials. And the balance sheet actually looks pretty solid. They've got almost $94 million in cash and equivalents, and what's really important is how they're spending it. Look at the R&D expenses, $5.6 million. That's actually down from last year, so they're not just burning through cash recklessly, they're being disciplined. And management wanted to make this crystal clear on the earnings call. The CEO, Anna Cohen-Dagog, said it plainly. They have a cash runway that should last into 2027. Now, that is a huge deal. It means they have enough money to get past their major clinical readouts without having to dilute shareholders by raising more capital. That's a big comfort for investors. Okay, so this brings us to the most important part of the whole story, the roadmap. These are the key events, the data catalysts that everyone is waiting for. So really, you can boil the whole investment case down to 2 key timeframes over the next year and a half. First, and most immediate, is the big ESMO medical conference later this year. And then, circle your calendars for the second half of 2026. That's when we get a crucial interim look at the data for their own drug, COM701. Let's zoom in on ESMO, because that's the next big thing. We're expecting a ton of data. You've got an update on their internal program, COM701, and then AstraZeneca is dropping 2 big updates for their partnered drug, including the very first look at its performance in bladder cancer. So, yeah, this conference is a massive event for the company. It could really change the narrative. All right, so let's put it all together. After digging through the quarter, the pipeline, and the cash, what's our call on the stock? And this really is the million-dollar question, isn't it? The quarter was a miss, but the stock didn't flinch. So what do you do with that? What's the trade here? So here's our call. We're rating the stock market perform. The thesis here is pretty straightforward. This is a classic show-me story. The market has heard the promises, now it needs to see the data. So we think the stock is probably going to trade in a tight range, pretty much sideways, until we get that data dump at ESMO. Now once that conference hits, expect a ton of volatility. But until then, it's a waiting game. And just to be clear, the next earnings report, it's probably not going to matter at all. It's all about the clinical news. So bottom line, the market's giving Compugen a free pass on a weak quarter, but that's not going to last forever. The real test is coming at ESMO. The big question is, can the data finally prove that all this potential is about to turn into real performance? We'll be watching. And just as a final reminder, this is not financial advice.